Yeah, boy! All right, we're not far away. Welcome to Forex.Today, to the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. GDP, GDP, GDP. Whoa! GDP! It's coming out now. Coming out hot. So, what can I tell you? Well, I can tell you this is what's been happening in the past, and our last one was pretty good, especially compared to before. Looks like anything over 1.5 is okay. We're expecting closer to 2.5. Some are thinking over 3.0. Cool. Is that going to happen? I don't know. So I just want you to understand the context of the expectations. Euro rebounds against Swiss franc as ECB minutes highlight cautious outlook.
Crypto today. Bitcoin eyes $120,000, Ethereum $5,000, XRP 3.35 as selling pressure eases. Hyperliquid price forecast. Hype poised for new record high as Arthur Hayes predicts 12 and 500% upside. Oil falls as end of driving season looms. Druzhba restarts.
The U.S. dollar continues its move lower today. What are the technical driving the three major pairs?
Investing Live European markets wrap. Dollar down slightly amid month-end caution. Mexico jobless rate SAA unchanged at 2.6% in July.
Mexico jobless rate came in at 2% below expectations, 2% in July. 56 seconds.
Consolidates near $3,400 ahead of U.S. GDP. Jobless claims.
Prop firms evolve in 2025, adapting to new technology and trader needs.
Coolio. Here we go, 40 seconds. Market is thinking 3.1. Yeah. We'll see. That's pretty bold, but, recovery. Yeah, whatever. Let's see. Setting us up for failure almost, huh? Tell you what, a low number is actually pretty good and a high number is actually pretty bad. Low number will make the markets feel like the Fed's going to have to cut interest rates in September to save our economic soul. So, bad is good. Not bad meaning bad, but bad meaning good. Okay, wait for it. Wait for it. Wait for it. Wait for it. Still nothing? Really? Come on, government. This is real-time data, so it's not us, it's them. Wow, really? Come on, where's the number? I hope it's not us. Well, hell's bells. What do you think about that? Does anybody have a number? 3.3, is it really? Whoa, that sucks. Because that says, hey man, Fed doesn't need to cut. Yeah, I don't know why it didn't load. Look at that. That's strange. Maybe because I clicked on it. I think maybe I goofed it up. 229 below average. There it is. Thank you, everybody. So, this is double bad news because it's good news. Less than average weekly claims, higher than expected GDP. There's no need for the Fed to cut. What? Refresh a page? No, I don't want to do that. No, this pulls live. It was just whatever, the data feed was slow on it for whatever reason. So that's a big fat disappointment. The numbers are good. Good GDP, good unemployment, and that's bad. Because now the Fed doesn't need to cut. Wah, wah, wah. Basically our worst case scenario. Gold, dang it! Well, we don't like that. Yeah, it is a big deal, Sky Killer. Yeah. There's the absolute and then there's the relative. So let's go back. Let me make my point. Let me clear my throat. Kick it over here, baby pop. And let all the fly skimmers feel the beat. Drop. All right. So the number is big. Okay. There's no doubt about it. So here's where we were. This is what 3.3 looks like. I mean, it's compared to what's happened over time. That's a big number. The second thing is we were down in the dumps. Okay. And now we're pulling a 3.3. Yeah. It matters. Because it means down here we were worried about the economy collapsing because of tariffs. And now we're not. No need to cut. So anyways, I mean, look, if you're pulling a 3.3, potential GDP is 2. So we're well above potential GDP. No need to cut. Okay. So if you guys remember how to do your GDP, okay, so let's do this. This is your potential GDP, and we'll put that at a nominal GDP is equal to 2.0. I'll say 2.0. All right. And then we want to, so that's potential, and we want to look at actual over time, right? And so a 3.3 means we're above potential and rising. And, the Fed typically cuts interest rates when we're here. Now, normally we're in a different scenario than we're in. Okay, where interest rates are actually just simply too high. But they're not too high if we're up here. And we're in this zone here, and we're so there's no need to cut is basically what it is, right? So it does matter. So it's not like, so typically if we're in, let me do a different color. If we're in this area from the trough to the productivity gap, so from the trough to the gap, that's typically when the central bank is cutting interest rates. Okay. And then from here to the peak, okay, so we'll call this cut, and we'll call that height. Okay, from the peak to the expansion, there's usually a hike. So if we're in this zone, okay, with GDP way above potential, that's not typically a time when the Fed cuts interest rates. Okay? This is typically neutral. This is typically neutral. This is typically cut. This is typically, right? This is typically neutral. This, okay? And if GDP was falling from 3 to 2 to 1, we'd be neutral. So anyways, yeah. You know what I'm talking about? So yeah, so you could look at subcomponents of the GDP and find out where it's coming from, and if it's catch up from this, and this was from front running or whatever. Yep. So anywho, probably want to go to do 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 do. All right. So what do we see here? And it's falling. This was 87. Now it's 85. And typically, if this is falling, okay, if this is falling and this is rising, US dollar gets strong. Yes, Angel, but so you're right. Angel says, I seem disappointed, and yet I don't expect a cut in September. That is true. I still want one. uh, yeah, it makes the stock market go up. Doesn't impact me personally. Right. I have a I have a 3.5% mortgage, and it's fixed, so it ain't going anywhere. So it doesn't matter to me. But if the market wants to go up because rates are going down, just even based out of Cap M or something, then great. If it gets consumers confident to go out and buy a car or have a generous Christmas or travel, whatever. Increases your standard of living. So you could just sit here and refresh this, but yesterday this was 88, now it's 85, and earlier today it was 87. So we've gone from, almost 89 yesterday, and at one point it was 90. So we went from 90 to 88 to 87 to 85, and that shows that dollar weakness that we've enjoyed the last, I don't know, 18 hours may be vulnerable. Yeah? Yeah. So these are swing trades from a week ago. Guess what? Today is swing trading day. 4 p.m. All members of TRADARS are welcome to join me at traders.com, and we will plan all of next week, just like this one here. Lovely. Looks like today we made the higher high. But, and that's a big but, I have my concerns. Good employment and good GDP is bad news if you want to cut, and that's a big deal. This is a plan we've had for, gee whiz, 2 weeks. And it's a big, fat, giant maybe. So the MACD, okay, is below the waterline, but rising. And I would like it to roll back down, falling below the waterline. And you're like, wait, I don't see a MACD. Oh, I know, I'm calculating it with my brain. I know you think I'm just a beautiful hunk of meat. I'm more than a male model. Well, yeah. We already, that came out on the headline news. Yeah, that Euro's moving on the meeting minutes. Yeah. Bitcoin making it up to its role reversal. Gold hitting its target. Okay. So how do you swing trade? Wayne, teach me how to swing trade. Okay, you buy it here, and that's where you exit. Well, that's it. Jiminy Cricket, Wayne, really? Yeah. Actually, I think that's a day trade, isn't it? Yeah, that's a day trade. Sorry. Day trade. So I think we're going to have to do some figuring out today. The market's going to either look through it or what, but yeah, there's your move here. And that's unexpected. So obviously not trending down. Now, euro dollar going up is usually good news and more related to the US dollar. But I think right this moment it has a lot to do with the euro, so pay attention to that. Look, Aussie dollar still going up. USD CAD still going down. Kiwi trying, but not there yet. So these are all in play, and oh, that's an old one. Yeah, that's an old one. That's interesting. We need to update that. But here's what I was going to say. This going up that much was unexpected, let's say a few weeks ago. But I started to notice changes in their economic reports because every Sunday we actually read these reports directly from the RBA and other Australian government institutions like Aussie Stats. Yeah. And the numbers are actually, not as bad as they were. And we're starting to see that reflected in the fundamentals. Not for New Zealand, though. Yeah. And so maybe Aussie gets a nice little comeback. Maybe. Take a look at the yens. And so we had that in a consolidation. It looks like it's going to try to break out. So how do you respond to that? If you believe it's broken out, okay? Let's do this in blue, okay? If it's broken out, and of course that's not blue, so we'll call it pink. That's the plan. Now, we still have this pointed down because the previous trend was down, and then we have it consolidating, right, in this direction. And so you let it break out, and then if you're going to try, okay, that's pretty risk on, in particular for the CAD. Kiwi, big drop, okay, and then what? Kind of going nowhere. You could even draw it like a similar triangle. Or in this case, I would consider it like a flag, which would then indicate this, but we may not be getting that. It just, if the yen pairs all go up, this is probably the laggard of them. Okay. So euro, we have trapped, but you might want to look at it also as a flag. So you have it trapped, which means you can say it's horizontal. And I usually prefer horizontal over these things. But anyways, how would you normally look to trade this? Okay, this is consolidation, and you get to the apex, then there's a break, pull back, long and gone. Is that what's happening now? I don't know. Maybe. That would be normal. That would be seasonal. And of course, we have that data at TRADARS. That's the whole point, or one of the main points of TRADARS, right? Is we have that data. So, how's that stock market going to take the news? Well, I don't know how people are going to react to it. That's the thing. So, if you ask me, which indirectly you have, the data suggests that the Fed doesn't need to cut. So, if the Fed doesn't need to cut and people have priced in a cut, then they have to unprice, they have to price out the cut, and that would lead to dollar strength and the stock market down. But maybe good news is good news to other people. I don't know what other people think. So yeah, so Richard, sure, good news to me would be bad, but I don't see it yet in the market. And so they might say, well, maybe it's good news that the Fed doesn't have to save our economic souls. Yes, we would prefer rates down, but if the economy is booming, you know. And by the way, 4.25% to 4.5% is not high interest rates. It's high relative to our peers, but relative to historic norms. And I don't mean, back in 1980 it was 20%. No, I mean when I first started trading Forex, it was 5.5%. Now it's 4.5%. Like, whatever, dude. Whatever. But when we have 3% inflation, 4.5% is a little high, but not crazy high. So, like if you're going to use that rule of thumb, let's say the Fed funds rate should be 1% higher than CPI. So if CPI, or let's say PCE. So if PCE is 2, Fed funds rate should be somewhere like 3.25. So if it's 3, it should be 4.25. Well, that's kind of where we are now. So what's the big zippity doo dah? Okay. So it's going to be an interesting day. Oh, for sure. So we'll have to let this market play out. It's going to need to figure out what it wants to do. And then we're going to meet for the swing trading group and try to incorporate this into a logical, intelligent trade plan for all of next week. Okay. But I'll show you if we're printing 3.3, that's a pretty high number in our range. No, not today. Starting next week, Sky Killer. But thank you for that. That's good. Starting next week, we'll do Tuesdays and Thursdays. Cool. Well, yeah. So technicals are not what moved the market, right, Richard? So, but you know that. You know that. Yeah. Right on. Hey, is coming up soon. I might be in Cairo. I might be in Dubai. I might be in Paris, and I might be in Hong Kong. Is anybody in these locations that would like to get together? Do a little meetup or something like that? Any of those sound attractive? Dubai, Cairo, Hong Kong, Paris. Hmm. Right on, TT. That would happen, I think, in the first quarter of next year. But yeah. But I'd like to do a meetup there. I know the perfect place and everything. That's a strange response, Sky Killer. Hey, do you want to meet up in Hong Kong? I wish I had a cousin in Hong Kong. What? Yeah, so anyways, Hong Kong's fun. I think it's going to be in the winter or spring, which is probably not fun. I was in Beijing one time, which is quite a bit farther north, obviously, but Beijing was cold. I'm like, oh, Hong Kong would be better. Yeah, the taxes are great. There's a lot of things about Hong Kong that are cool, and it's got to be the most entrepreneurial place in the world, and I really like that. Right? Is that right, Richard? Cool. By the way, I'll probably sell my Hong Kong company, and I forgot about that because the transfer we have to do in person. So if anyone wants to buy my Hong Kong company while I'm in Hong Kong, you want a 15-year-old company called Blue Sky, and it's a trading company. What about Japan? Well, it's just not. I'd love Japan, but I'm just not going there for business. So all of this is business, right? So I'm like, just nothing's going on with me in Japan. Oh, well, if you want to do, I don't have per capita built into this database because that's what is that, a World Bank, right? That's a World Bank stat. But we can check GDP out of Japan, and not quite the same, huh? Little bumpy. Well, we'll see, Sky Killer. They're trying something new again to see if they can change things. So, huh? That COVID was weird, huh? Yeah. So they're just kind of chugging along. Was that right, Richard? Yeah. Well, that's not always the case anymore, global exchange. Um, yeah, people used to think, Japanese stuff was cheap. And then what happens is you go through a maturity like foreign direct investment increases um, things like productivity and quality, but also there's a life cycle in the development of new economies where you go from um, digging in the dirt and selling products to another country, to digging in the dirt, pulling the stuff out of the dirt, making an intermediate product, and then selling it to another country. Then you can dig things out of the dirt, make the intermediate product, make the final product, and then sell it to another country. And then you can go through that, dig in the dirt, pull out the right, pull the stuff out of the dirt, make the intermediate, turn it into a final product, and then increase the value proposition of, well, all of it's a value proposition increase, but let's say instead of making cheap cars, you make quality cars, and then quality cars into luxury cars. Okay, and that's a normal life cycle. And Japan went through that, and now, you know, I remember when flat screens came out, we called them plasma screens, right? And if you wanted a TV, plasma TV, it was Sony or Panasonic, right? Good Japanese company, and that was the best, right? And Alexis was the best. Um, and then, but there was a time when Japanese stuff, Japanese cars, and Japanese products were crap, and then suddenly they're the best. Well, it wasn't sudden; it was generations. And then Korea went through that same life cycle, where if you wanted stuff done cheaply, right? Japan was too expensive, so we went to Korea. And now, if you want a quality phone, a quality TV, a quality server, Korea is your place. And then we went to China. And then China's gone through that life cycle. And now we're moving to India, right? And so there's a life cycle to the development of economies. And in Africa, many of the countries are still, or many of the economies are still digging the dirt, sell something to, and sell what you find in the dirt to another economy. And it's a very low value proposition type thing. And therefore, the profit margins are very small because it is about quantity. How much dirt can you dig in? You know? Yeah. Where's the cobalt? Go get me some cobalt. Well, I have a shovel and a bucket. Yeah, well, go get me some cobalt. We're going to need 10,000 people with shovels and buckets. Well, you know what? That's where your Tesla gets its cobalt. There's a field in the Congo that has 10,000 men, women, and children digging in dirt to get you cobalt so you can slip into your Lululemons, even though it's the middle of the day and you're dressing in workout outfits, but you're going to slide into your Lululemons, the ones that make your butt look good because there's padding in it, because that's necessary too. And you slide into your Tesla and you go to the farmer's market where you can get organic carrots. You're like, dude, what kind of carrot's not organic? But anyways, well, to do all of that, yeah, there's a factory in Vietnam somewhere, and there's an illegal mine somewhere in the Congo with children digging up your cobalt for you. Yeah, unpermitted, unregulated, totally dangerous. People die all the time. Yeah, but you're organic. Sorry if you're organic, or you're like, wait, don't pick on me. Yeah. Hey, man, I was a vegan for a year. It's kind of organic. Hey, what was the average lifespan of a human over the last 3,000 years? Just what do you think? How long did a human being live 1,000 years before Christ, around the period of Christ, through the dark ages of Europe? Okay. And over the last 1,000 years, how long did a human live? Uh-oh, I'm going to pick a fight today, right? I'm going to pick a fight. It's okay. No, I preach to teach. Anybody? Nobody knows? You don't want to go there? I lost my internet. I muted my mic. Don't go there, Wayne. Okay. No one. That's it. One guess. 45. No other guesses. Wow, you guys really don't want me to go there, I guess, huh? On health, 30. Really, only two guesses. Definitely not 70. Definitely not. But here's where I'm going. That 30 to 40, 45, all of that's acceptable. I think 30 is a little too young. But 40, 45, I believe, is the true answer. It's not the same as today. There's, it's just not even true. No, 100, no. All right, so I think the real answer is about 45. Yeah. So, of the 3,000 years, let's remove the last 100 years. So don't include the last 100 years. So the 2,900 years before the last century of time. Okay. What percentage of humans were organic? They only ate fresh food and vegetables and with natural fertilizers and natural pesticides through just proper farming. Ones that had clean air and fresh water. What percentage of humans had that? Yeah, everybody. Yeah. All right. So for the last 100 years, we're sucking in polluted air, drinking polluted water, eating monster food with monster pesticides, monster fertilizers, and we live twice as long. No, I'm pro science. That's all. Someone came along and invented better medical care. They're like, hey, look, this penicillin stuff. Hey, if you take the mold off of bread, I can keep you healthy. Hey, if we do this, we do that. Hey, you know what? If we use RNA, we can cure COVID. You know. Now, Derek, I knew I'd get something right. I have an argument about that, which is fine. Yeah, washing hands. You know, the number one killer in the world is water, and it's not from drowning; it's from drinking it. But anyways, you know, I'm just stirring the pot. But yeah, washing hands is a big deal. We didn't know, right? We didn't know simple things like that. But whatever, we're just having fun. So we got good news right now. It seems like the market's treating it as good news, but I fear that the good news is bad news. So we kind of need to play it out. Later today at 4 o'clock at traders.com, all members have access to the swing trading group where we'll take a look at the market's response today. And really, I guess we need PCE tomorrow. But we'll try to plan out all of next week today, huh? So that's what the swing trading group is about. I invite you guys to check out traders.com. It's pretty cool. You're instantly notified. Now, huh? It's pretty good. You should check it out. What can I say? It's better than pretty good. I mean, I think you're going to be freaking amazed. And then I'm working on something that would take your level of amazement to astonishment. But I can't tell you about that today. You just need to join. Imagine, yes, every trade you make will be logical and intelligent, but you'll also have a community of like-minded people that believe their decision-making process for trading and investing should be quantitative as well as technical. As well as technical. I love technical analysis, but that's not the first thing you do. Okay? Peace on earth. May the pips be with you. May our profits be above average. I'll see you at 4 o'clock. Traders.com.